Alright, thank you guys for clicking on today's video. Today, I'm going to solve all of your investing problems. So what do I mean by solving all your investment problems? I'm talking about the biggest mistakes that you're going to make when you first start trading. And the mistakes that you probably are still making just because you haven't been told that these are actual mistakes that you're making. So the 5 biggest mistakes that I tend to see are going to be over trading, selling too soon, cheap versus expensive stocks, being enticed by fast money like options, and being too stubborn with your stock. Now, I do hope you guys watch to the end of the video because I'm going to dive into each topic and give some great examples and provide some details that you're going to want to basically stay tuned to the end of the video. So the first thing I'm going to go over is over trading. This is a big thing I see when people first start out. They can't hold on to a stock for literally their life. They'll get into one, find another stock that has better news, and then they'll sell their stock and get into that one. But those commission trades adds up really fast. Depending on your brokerage, it could range anywhere between $5 and $10. But I'm assuming most people here that are watching these videos actually have Robinhood, in which you have free trading. But either way, still over trading is going to kill your account because you're going to miss whenever they have the spike. You can't time that exactly. So every time you get out of that, you're just basically trying to find a needle in a haystack. Where instead, in my opinion, the point of investing is to invest your money and then have it sit there until it starts working for you and building on your portfolio by getting more and more securities and equities inside your companies that you're investing into. Which brings me to the next thing I want to talk about is selling too soon. A ton of people do this. They assume that, oh man, I made 20% on my money. That's great. Or I made 30%. God forbid 40. And at that point, you're doing really well. Like, don't get me wrong, 40% gain is great. But more often than not, if you pick a winner, it's going to keep going up. I would say hold on to that stock until you find that the stock is overvalued. It could go up tenfold and still be a great stock to own. And it's funny because on the contrary, people, when they have a stock and it goes down 50%, they refuse to sell it. But if your stock went up 50%, you would more than likely take those gains as soon as possible. The next thing I want to talk about is cheap versus expensive stocks. And we all know what happens here. You usually open up your account and the first stock you're going to talk about is Ford and how they're trading at currently I believe $5 or $6 a share. And you're like, wow guys, did you know that Ford is this low? It has to go up, and it used to be $60 at one point. Just because the stock is trading lower than it used to be doesn't mean it'll ever go back up to that exact pricing point. The main thing I'd be concerned with is where they're going in the future. And now I do understand if you have a smaller account, let's just say even $100, and you can't afford certain stocks because they trade above $100. With that, I would recommend a different strategy, not really investing. I'd recommend more so trading until you can gather more capital. And I have some videos talking about that as well. The best one I would say you guys go watch is Does It Pay to Follow Dumb Money? And my answer was yes. And I would say just go watch that video. It's a great way to make some quick cash with not really too much experience. Obviously invest at your own risk. I'm not a financial advisor, but I do expose a little bit of a pattern that you guys might want to go check out. The fourth thing I want to talk about is being enticed by fast money, and typically this is either day trading or options. Now I'm assuming you're not a day trader, since if you are, you have about $25,000 in your account. That is, of course, unless you trade on TD Ameritrade, which you don't need $25,000 in your account to day trade. But if that's the case, either way, let me go over this topic. So what I mean by this is a lot of people are like, oh, wow, this stock goes up 50%. But I see people making 2,000 returns, 2,000%, or they're turning $300 into 40 grand overnight. And it's amazing, and it's so easy, and it just involves one trade. And if I just need one trade to do even a quarter what that does, I'll make so much money. Please don't fall into that trap. More often than not, those are advertisements that you're seeing that people are trying to sell you a course that costs $500 to $2,000, when I'm going to be honest with you, you can get all that information more than likely for free. And the more frustrating part is typically those people aren't even actual traders. They may have had a couple good trades and they've saved those screenshots, and they're going to flaunt those for the rest of their life. So please don't fall in that trap. And if you want a good way to tell if it really is a good course or anything like that, I would check how much they're charging for. Some people are going to say, oh, they know their value. They know that they can charge $2,000 for that price. Yeah, give me a break. I bet you they got all that information for less than $100 or so. And on top of that too, try to figure out their intentions. You know, if their intentions really are to teach you, try to look at the information they're actually putting out, if it's actually good quality stuff, or if they're really just trying to like put out basically nothing that seems like they're talking about something just so you can go buy their course that explains just a little bit more detail. And if you're lucky and you don't fall into that trap and you really are just enticed by doing stocks, just go ahead and try to find free information. You don't have to know a ton about the stuff, but know enough that whenever you do something, you know actually what you're doing. You can explain what happens afterwards, why that happened, and then you can expose a pattern for yourself and in turn become a better trader all in one go. And the last thing I want to talk about is being way too stubborn with your stocks. So I'm really embarrassed. I can't remember who said it, but there was a famous quote, and he said, "When the facts change, I change." And the question he was asked was, what do you do when bad news comes out about a stock? And what he means by this is he's basically saying that whenever he finds that a stock is not what they were, instead of holding on to it and praying that they come back, he just sells it and gets rid of it. Like, he'll take his loss, whatever it is, because if the new trajectory is going downward, you might as well get out as soon as possible. So again, these are not all the mistakes that a lot of new traders make, or even advanced traders or long-term traders or whatever you want to call them. But these are the ones that I see that happen right away. And I suggest you guys watch out my other 2 videos about the top 10 myths, part 1 and 2. Because those also go over some common mistakes that people will make when they start trading. So again, I hope you guys liked the video. If there's any type of video you guys want to see, whether it be a book summary, a topic explained, a trading strategy explained, an investment strategy explained, certain words, or anything like that, leave a comment below and I'll make sure to definitely get to those videos. So as always, remember to like, comment, and subscribe for more future content.